Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Wednesday, September 13th, 2017, and this is the Daily Report for Gold and Silver. We now have 3 consecutive days with lower pricing in both gold and silver. Equities across the board moving to new record highs. First to gold, $1327.10, settling down about $5.60 on the day. The low and the close is critically important, as we'll talk about as we look at our technical studies. About a 6-cent decline in silver, $17.83, and the dollar continues to bounce to the upside, gaining almost 0.7%, closing well above 92 at 92.50. Now, Dow Jones Industrial Average, NASDAQ, and the Standard & Poor's 500 all closing at a new record high. Dow Jones up 39 points at 22,158, NASDAQ at 6460, and the S&P 500 at 2498, just 2 points shy of 2,500. While it's true that ever since Friday's record close in gold, which resulted in prices going to its highest point this year, we have seen a slow and methodical decline in terms of pricing. We have had gold lose roughly 38% from the beginning of the second leg of this rally to the top that was achieved last Friday, from about 1256 up to 1363. Now, we started to talk about different points in which it would be a logical price point to find support based upon our Fibonacci studies. And to that end, I have created a basic harmonics in between 2 distinctly different time cycles that are really pointing to 2 particular price points or targets that I believe will be extremely important in the very near future. The first of the 2 retracements begins back in July at about $1,200 per ounce. It terminates at 1363. So we're looking at the full extent of the rally, waves 1 and waves 2, collectively about $161. The second fib retracement starts from the beginning of the second leg of the rally up until the record high achieved on Friday. And the interesting thing about this particular study in terms of the harmonics itself is we get a very narrow band at 38% retracement and 23% retracements collectively. In other words, the longer of the 2 retracements puts 1326 as a key price point to look at, whereas the shorter of these retracements looks at 1322. We also do get our harmonics at 61 and 38, as you can see, 1297 and 1302. So these are the 2 key targets that I am absolutely focusing in upon, and my belief is that we will see gold bottom either at the higher of the 2 prices, 1322 to 26, or the 1300 area, which is 1297 to 1302. And right now we are very, very close and really at the first level that we want to look at. You can see that based upon this low. Gold today is traded down at its low to 1324.5. It's currently at 2710, but that certainly puts it right within this harmonics here. And that tells me that this could be significant. Now, the chart that I'm using is a 2-day chart rather than a single day. I'm attempting to smooth out some of the smaller moves with extended highs and lows on the day to give us a clearer picture of how gold is currently reacting. We can also see that throughout this week, gold prices have drifted lower and have now given back 23 or 38% of the rally, depending on where you start your count from. And as such, we are currently in a 4th wave correction. And the way that we're doing our count is first wave, wave 1, starts at 1200. It takes the market up to approximately 1280, which is here. We get roughly a 23% correction of this rally. We conclude our shallow correction, wave 2, roughly first week of August. Then we go into an extended rally, that rally moving the price of gold from roughly $1256 to $1363, roughly a $100 leg of the rally. This, of course, would be our wave 3. We are currently in a wave 4. Assuming that this wave 4 concludes in this area here, we can look for, as we talked about yesterday, wave 1 and wave 5 to be roughly equal. And therefore, our current model is forecasting that gold prices will reach a high point for the year, either at 1400 or 1380, and that would be based upon a 1-to-1 relationship between wave 1 and wave 5. The question is, where will this current wave 4 terminate? Will it be at these levels at around 1322, or will the market trade lower, going as low as 1300? In either case, I do believe that the next rally will take gold prices to the all-time high reached this year. More importantly, that price point will be above the high of last year, which would put our bullish model in full force, in that we have now had a major higher high than the last high and a major higher low. And traders, after hitting a low last week of 91 on the dollar index, we continue to see bullish sentiment in that index build. We are currently up about 0.75% today. 92.50, that settlement price. And the real question is whether or not this will be an extended upside move following this dramatic decline. And then lastly, do want to take a look at the equities markets, because we've hit some new records in the equities markets. As you can see, Dow Jones Industrial, 22,158, closing in record territory. Standard & Poor's, also in record territory. And lastly, the composite, also closing in record territory. All three major indexes continue to get bid up. Traders, over the last few days, as we have been watching this decline in gold pricing, we have been using our technical studies to create a model that will give us some valid information as to where we can expect to find some support. We've used Fibonacci retracement as well as Elliott wave theory. Now, on tomorrow's show, I want to add the third element, which is candlesticks, Japanese candlesticks. Whereas the Elliott wave and Fib retracement will allude to certain price points that we could find support, we need to have an effective tool to be able to forecast that V or pivot point in the market, and candlesticks is an excellent tool to do just that. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.